Hey, YouTube, Facebook, Instagram. What up? The Sean Wiggins B&C. Basic financial concepts. Hey. Well, hey. Good afternoon, Facebook, YouTube, Instagram. How y'all doing? I'm dancing because I made $4 today in the stock market. And I ain't have to work for it. That's because my money's working for me. Go to work. And you know what's the best part about it? They don't get tired. Hey. So like, if you took a little bit of your stimulus check and you went and bought you some stocks with it, you put your money to work. Instead of going to the mall, liquor store, and wasting it all, getting the newest sneakers that came out, because you want to look fresh for people. You want to let them see you. Look at me. Hey. You want to pay the bills. It's already late. What's another week? What's 2 more weeks? Hey. Now listen up. We got 156. We got 156 invested. We got 156 invested into the stock market, and I'm up 1.65% today. I'm up 1.65% today. It's giving me $2.54 for today so far. But overall, I'm up $4.36. I'm up $4.35 on my investment. Today in this video, I'm also going to dollar cost average. What is dollar cost average? Dollar cost average is when you have positions and you add to those positions over time. It could be weekly, monthly, daily. You add into it. You don't care about the price. You're just going to add and just keep adding and just keep adding and just keep adding. And as you do that, you will see that the gains you have will start to increase. And the reason why that is, let's just say, for example, you had $1 invested and it went up 5%, right? You had $1 invested and went up 5%. And somebody else had $100 invested and it went up 5%. Now both of you guys made the same investment, but you only put $1 and he put $100. Guess how much you made and guess how much he made on the same investment? He would make $5 on his $100 investment. You will make only 5 cents. And the reason why you make 5 cents and he makes $5 is because you only had $1 to his $100. So he had $100 that made 5 cents. So he got 5 cents 100 times equaling $5. So you see, the stock market is made to be confusing so you don't understand. And then you gotta go pay someone to do it for you. But when you understand that the stock market ain't nothing but mathematical equations, and understanding a couple of little things, very basic, that I teach, I constantly repeat the same thing over and over. And you might be saying, well, why you don't have a Lamborghini? Don't worry about that. The knowledge that I share with you, if you apply, for all you know, you might learn this and become a master. Because you know what they say about the teacher and the student, right? That happens. But anyway, moving on. In this video, we're going to dollar cost average, all right? I'm going to add to my position, and I like to add to my positions around 11 o'clock or 2 o'clock. there's something special about 11 o'clock and 2 o'clock in the stock market. And when you begin to get pretty good in the stock market, you will understand these concepts that I'm telling you. You will not only understand, but you will feel it, right? Because you start to make a connection with the stocks. Let's go. So we're going to look at, the first thing I like to look at is the daily percent change. I like to see who's up and who's down for the day, all right? Who's up and who's down for the day. And how I do that, as you can see, Tesla is up 5.18%. That's not surprising. As we know, Tesla is who they are. Tesla is going to always be going up. I can't see the genie ball, but I have belief in this company. I have strong belief in this company, right? Now, when you do your research and you see what they do, Tesla is not just about cars. Tesla got a whole, we're not going to get into that, all right? They're up 5%, all right? Primerica's up 5%. Penn National Gaming is up 3%. So as you see, Primerica deals with money. Primerica is life insurance. You need life insurance. We're going to help you invest. Money. Money make money, right? That's obvious. Penn National Gaming, gambling and stuff like that. Money make money. Reality income, real estate, REITs, monthly REITs, right? Apple, we ain't got to talk about it. Alibaba, we ain't got to talk about it. But Apple and Alibaba is the only two that are down right now. Reality income is close to, like, you know, the line. All right, let me tell you something real quick. Look at reality income. When you look at, you see it's 0.07%, right? When you see that, I want you to remember back when we was in school and we was learning about like percentages, like and negative, and you got confused what was negative, so you know how it went from positive. So let's say it's positive and you counting backwards. So it goes 5, 4, 3, 2, 1, 0, and then negative, all right? I want you to think of that every time you look at stocks. All right? So boom. 0.07 is right next to 0. Then the negative, okay? So it's borderline right now. All right? Let's look at it real quick. See, if it goes down a little more, it's going to be in the negative for the day. And basically what that means, I'm trying to see, this is like, all right, let me tell you this pattern. All right, real quick. See, I'm over here bouncing all over the place. When you take a step out, this pattern right here is called consolidation. It's not going up or down. It's just going sideways. It's consolidation. So with consolidation, you have one or two choices. You can just watch and see if it go down and then you do your stuff, or see if it go up, you do your stuff. That's called getting confirmation, all right? Or you could go out and do some history, all right? And I would feel comfortable that it's gonna go up, of course. All right. And why make the decision? We're a month out. I start over here and I go to my left. All right. It didn't go down. It didn't go down no more over here. Bounce. It didn't go down no more over here. Bounce. There's nothing over here. All right. Nothing over here. All open space. It went down over here, but it didn't go down that far over here. So, you know, is it going to repeat that again? You can use better judgment with better charts on different platforms, okay? But for right now, we're going to get back to what I was talking about. All right, so I like to add to the positions that are the most down. All right. Now I'm gonna show you this. I'm gonna show you why. Look at the position of Alibaba. All right, let's go a month out. All right, that's for the day, and then we're gonna look at the one that's all the way up. You see the difference in the chart? Go all the way to the right. Look, see the difference. See the difference. So now, what does this mean to me when I see this? All right, what does this mean? Look, when it's like this, when it's at its highest point, right? Right now, I think, Primerica is at its highest point right now, I believe. Let's see. Oh, that's why I can't see the price. All right, so look, what that mean? Going to my left, above the line, there's nothing. There's no history. So it's going to drop soon. That's what happens when it reaches its high. It's not going to keep going to the moon forever. It's going to drop. All right, so it's not good to add right now. Now, if you hold in this position for like, let's say, many, many years to come, then you can add right now. It don't matter. You dollar cost averaging. But I'm doing it a little differently. I'm kind of adding every day. All right. So I'm not gonna add right now. It's gonna not serve my purpose, me, like the way I'm trading. You know what I'm saying? And you guys will understand that more when you start getting more experience. All right. So, anyways, going back. So now, all right. So Alibaba, I'm gonna add to Alibaba. We're not going to add a lot. I'm just gonna add a little bit, little by little. You know what I'm saying? I'm 25% rating this position, $25 invested. So we're gonna go ahead and put $2.50. That's it. $2.50. That's it. So Friday, I may clear out, right? Clear out, and then we're gonna start keeping a journal every week. Clear out, and then Monday start new positions. This is the way I'm trading. Apple, wherever you know what Apple is. We ain't gotta talk about Apple. See, Apple down right now. Eight. Yesterday, I was thinking about taking like $20 and opening up 20 positions just because I had to find 20 positions that are down and just block and just leave it as, and just keep adding to it little by little. It's funny how that works, like magic. One of the disciplines about this, they got dividends coming up. Okay, while I'm on this topic, there's another company I want to get. It's another REIT. It's AAR. I see what they're trading at right now. This company here pays monthly dividends. Look at the all-time high, only back in February. It was look, they was trading at $20. They're trading at right now $10.89. So what do you think I'm gonna do right now? I'm gonna buy me a whole share just because. You know what I'm saying? Look, I'm gonna buy me. This is buying assets right now. I'm buying assets right now. Well, what is an asset? Asset puts money in your pocket. So right now, by me buying this share, they're gonna pay me monthly. I believe for one share is 12 cents or 10 cents. But every month for the rest of my life, as long as they're in business, I'm gonna get 10 cents a month and still have my initial investment. It's gonna fluctuate in price, of course, right? So it's the goal, of course. Right, there we go. So now what does that mean? I'm gonna buy more of these. It was only $10.89, right? So look, if I never ever bought another share, I would get my money back, right? So 10 cents every month, that's $1.20 times that by 10, it's $11 and change, right? Whatever come out to. So 10 years, I get my money back, right? And then after that, it's all profit, the dividends. So when you start doing the math in your head, you're like, what if I had 1,000 shares of this? What if I had 2,000 shares of this? It's 10 cents 2,000 times what that come out to. Now, when you first hit it, 10,000 shares, like 10,000 shares, oh, I would never get that, could never get that. But you have to start somewhere, right? You buy one share, then you have two, then you have three. Before you know it, you got 10, before you know you got 20. Because you're spending the money anywhere. You spend the money anyway somewhere else. You go to the store, you waste it. You go shopping, you waste it. Not waste it, because you get instant gratification when you buy your stuff, right? That's why we spend the money how we spend it. We want that gratification. We want them feelings. We want that feel good. Ooh, I feel good. That's why we disconnect ourselves with investing, because it don't got the instant gratification. Hey, when you understand the words and understand the feelings and understanding with understanding, and you start putting it together like a puzzle, then you would start understanding. If that even makes sense. It ain't make sense to me, but I know you're gonna put the words together like what I meant and understand what I meant, right? That's what we're doing. You gotta buy assets. 2021, you gotta be buying assets. What is an asset? Assets put money in your pocket. So right now, I just bought this asset right now. Every month, I'm gonna get paid a dividend. You can Google it right now. What's a dividend? Matter of fact, come on, man. 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 All right, so you go to Google, go to AAR. Yes. All right, go get the lotion. Yeah, that's the voice you always hear in the background. Okay. All right, so here we go. So, as you can see here, right? See what it says? Let's move that the way. All right. ARR dividend history, ex-dividend date, January 14th. What does that mean? You have to own this stock before the date of January 14th. Meaning when the bell opens on the 14th, you must had this stock already. You can't buy it after because you missed it. All right? So now, the payout date is January 28th. So listen to what I'm telling y'all right now. I bet you that went over your head. Okay, look. If you buy XYZ amount of shares of AAR, you're going to get 10 cents a share dividend. And then you're going to get paid. You got to have it before. You got to have it the 14th, right? Before the 14th. I can't, listen, I'm going to be honest with y'all right now. I think you got to buy it on the date or before. I think it got to be before the date. But guess what we could do, right? Guess what we could do. Come on, man. Come on. Come on, man. Come on, man. Let's just make sure ex-dividend date for stocks is usually set one business day before. All right? I said it right. Come on. Stop playing with me. Come on, man. Come on, man. Come on, man. I just had to make sure. I want to make sure I was putting out the right information to you guys. You know what I'm saying? Come on. Ex-dividend date. Let's go over it anyway while you're here. Ex-dividend date for stocks is usually set one business day before the record date. If you purchase a stock on its ex-dividend date or after, you will not receive the next dividend payment. Instead, the seller gets, you understand? All right, there we go. I said that. I just want to make sure, you know what I'm saying? Because I am. All right, let's go back to it. So, all right. So right there is like a cash flow you can start building. All right. With this position alone, you just start buying multiple of these positions. And every month you're gonna get paid. But that's called that's a whole different strategy. We won't teach that anyway. We talking about dollar cost averaging. I went off with that one, right? But hey, y'all still got some good nuggets. All right. So as you can see right now, I got a 171 invested. Let's go over here. 171 invested. 171 invested. I'm up $4.01. And to put all my positions together, we would call that a portfolio. It's up 2%, 2.35%. All right. Now, one thing I like about the stock market, and one thing I like about understanding the percentages, and one thing I like about understanding the rule of 72, the rule of 72, let's go to the rule of 72. Come on, man. Come on, man. Hey, the rule of 72. Before I even read that, right? The rule of 72 tells you how long it would take for your money to double. For example, if you're getting 1% from the bank, you take that 1%, you divide it into 72. You already know what the answer is: 72. It's gonna take you 72 years for your money to double. All right? Okay. The rule of 72. How does the rule of 72 work? The rule of 72 is a simple way to determine how long an investment will take to double. Given a fixed annual rate of interest by dividing 72 by the annual rate of return, investors obtain a rough estimate of how many years it will take for the initial investment to duplicate itself. Didn't I say that? Like, come on, you guys don't think I know what I'm talking about over here. You guys think I don't know what I'm talking about over here. The Sean Wicks BFC. Let's go. All right. Go back to over here. So you see how easy this get? Over the years of me doing this, it's like beep, coming in my hand like beep. I can stop trading, start trading again, beep, and be in profit, beep, just like that, beep. Let's go. LaShawn Wick is BFC. So I don't like numbers like 171. I like numbers like fives and zeros. You know what I'm saying? Everybody understand that. So I'm gonna even that out. Like not even, I'm gonna odd it out. Let's say I'm gonna odd it out. So let's go over here. All right. All right. Let's go over this. So when you hit that, right? I click on it, right? Click on it. This pops up. All right. So you get your daily percent change. You get your my daily change, my daily return. That will be right now. I'm up $1.11 in this position. I can sell it right now. I'm up $1 in Tesla. I can sell it right now. Y'all already know Tesla. I love Tesla. Who don't love Tesla? Yeah. And I'm down in this guy. Because I'm down, I'm gonna add. Ooh, yeah, I like that. See how I drop right there? Let's talk about that. Sorry, y'all know I bounce around. Come on now. All right, look. This right here, this position that just happened, is called a gap down. All right. Ooh, baby. Yeah. Okay. This position. All right. Remember what I told y'all? Look, what I said. It had consolidation. Look, consolidation. And what I said, we gotta wait to see if it's gonna go down, and then we do what we do, or if it's gonna go up, and then we do what we do. Look what it did. Now, I didn't know it was gonna go down, but the pattern of consolidation, two things are gonna happen next. It's not gonna consolidate forever because no pattern is forever, right? We know this, so we got that. So we have consolidation. We have consolidation. What's gonna happen next? Boom. This is called a gap down. So now we got to know what a gap down is. What is a gap down? A gap down is what you saw. A gap down. What happens when you start knowing the stories and the patterns? What happens after a gap down? It go back up. Especially a good company, it go back up, right? It's gonna go back up because the force. Think of yourself falling off a cliff. You fell off the cliff, and you're gonna do everything in your willpower to get back to that where you was, and you want to pass that point. So when that happens, it happens for whatever reason it happens. We don't care. I mean, we care for those, but we don't care. We just know that from the gap down it's going up. So let's go. Gap down stocks. Okay, here we go. Whoa. A gap down is when a stock opens at a lower level than the previous day lows. Gaps are areas on a share price chart where the price of a stock moves sharply up or down with little or no trading in between. Playing the gap. Come on, man. Yo, it comes to you like nothing now. Let's go, man. So I'm going to answer it right now. Of course I'm going to answer it. You'd be a fool not to. But only thing is, like, you gotta see. Watch tomorrow. I'm gonna add come on, internet, don't do me dirty. Internet trying to do me dirty. See, sometimes the phone heard me, and the people in the office heard me like, he on to us. So I gotta fix that brown stain. Come on, man. Come on, internet. Oh, that's a bull crap. They know what I'm about to do. That's why. All right, see, this is whack. All right, I'll catch it. I'm gonna catch it. They're doing that. I'm gonna catch it. I'm gonna. Come on, Charlie. I think I'm doing too much. I got too much apps open and stuff. Hold on a second. Rock Legion. That boy is Benny Hanna. Shout out to the barber. Got me laced up right now. Alright, we back on. There we go. There we go. Look, now watch this. Look, it's bouncing already. Come on, man. Already doing this thing. You gonna get. We gotta take advantage of that. Gotta take advantage of the gap down. I caught it. I plan on selling this position on Friday anyways. So our Friday, you gotta do what it do. Hey. Yeah, I got shit on even put. I should have put less in there, but all we got. We got Apple. I hate them crazy numbers. All right, ladies and gentlemen, LaShawn Wicks, that's it. LaShawn. Had that ready for tomorrow. Have that ready for tomorrow. The even numbers. Friday we sell. And we're going to do the same thing on Monday. Sunday night we pick our positions. Play it through the week. You know what I'm saying? Yeah. Chalet. Alright. Until next video. I'm going to do it in video. I don't know. I know how to say I'm going to do it, but I don't. So to y'all lady, y'all enjoy the rest of your day. LaShawn Wicks, BFC. Credit repair. Want to learn how to trade stocks. Want to know how to have total gains. I'll show you how to do this. You can have one-on-one consultations. All of this right now is for free, but it's not going to remain for free because I got to make money because I do invest a lot of time in this. A lot of time. Peace.